I think it's an interesting case study when housing markets in different parts of the world collapse or do well for that matter, how they can have a correlating effect on the US. And to be honest, we really haven't seen a full impact of where a collapse has happened in another country and how that affects our housing markets or our capital markets for that matter. You've seen little bits of it where China is obviously going through a really struggling time in their housing market. And so there isn't a vacuum effect that occurs when these things go wrong in a country like China or in a continent like Europe. That terrible. But when the reverse happens, when there is a great financial crisis in the US, that creates a much larger global effect because it starts affecting the largest lenders essentially in the world. And they suddenly have immense amount of risks on their balance sheets that they now have to account and actually capitalize for. And that's when you start having a global problem.